Now let's talk about the homeowner who already knows exactly what they need. Not maybe, not someday, not just in case. They know. They've done the math. They have a specific project, a specific expense, or a specific problem that they're trying to solve here. And that's where a home equity loan starts to become interesting because unlike a HELOC, this isn't about flexibility. It's about certainty. You borrow a specific amount, you receive the money up front, and you typically have a fixed payment and rate that never change. So it's simple, predictable, and there's no guessing. Think about someone carrying $40,000 of high interest credit card debt, or someone who already signed a contract for a major home renovation. They know exactly how much they need. They don't need ongoing access to funds. They need a specific solution. And for that type of homeowner, a home equity loan can make a lot of sense. But then that same thing that makes it so attractive can also become its biggest limitation because once the loan is funded, that's the loan. If circumstances change, if costs increase, if you suddenly need additional funds, you don't have the same flexibility you might have had with a HELOC. And unlike your first mortgage, this usually creates an additional monthly payment. So while the payment may be predictable, it's still another obligation that needs to fit comfortably within your budget. That's why this option tends to work better for homeowners who value certainty, people who know exactly what they need, exactly what they'll use it for, and who prefer knowing what tomorrow's payment will look like. But what if you're looking at your situation and thinking, I don't really want a second mortgage at all? What if you'd rather replace your existing mortgage entirely? Because for some owners, that's where the conversation starts to get really interesting.